Morning, everybody. We're going to do today the higher level revaluation question. So I'm going to be going through this at a higher level pace now. I really recommend you to do the ordinary level video on reval and depreciation and be really on the ball with that to be able to keep up with the pace of what we're going to do with this guy here. Okay, so this is a 60 mark question and we have a couple of parts in it. So they're looking for the relevant ledger accounts. They've specifically said do not give us the bank or don't give the profit and loss. And they're asking for the extract from the balance sheet. 52 marks for that. And then we have a further 8 marks in relation to theory. Okay, so I'm going to focus in this video on the 52 marks in part A, and we're going to go through the steps for that. If we look at the question, you can see that we've been given 5 years worth of information. 20, 21, 22, 23, 24. So 5 years worth of information. They've given us the information on the beginning of the year. They've given us the depreciation rate of 2% straight line. And we're doing a full year of depreciation on the year of acquisition and none on the year of disposal. Okay, so in order for us, and land, just to point out, land is not depreciated. Land isn't ever depreciated in any of our leaving cert questions. Okay, so in order to perform this, in order for us to perform this question, we need to create a table to calculate and hold our revaluation information, and then we need to do our T accounts, which is where the marks come from. So all the marks you're going to get are going to be in your T accounts, but we need the table to inform the numbers that are going to go into that. So first thing we're doing is doing our layouts. Okay, so you're starting on a double page always in a reval question. You're starting on a double page and know the layout of your reval table. So you're going to need 5 rows for your years, and then you're going to need a couple of rows from your headings. So we're going to have our year as the first column. We're going to have land, the next column, the original building, which we had at the start, a new building, which we'll buy during the question, and a total for our land and buildings account. The total number here is the number that's going to go into our land and buildings T account, but it's made up of 3 different parts. So to get the total number here, we're always going to be adding what I'm saying here, A plus B plus C. The land value, the original building, the new building value is going in there. So that's our asset account. It's always going to be the cost. Then the next set of columns over here is our provision for depreciation accounts, our accumulated depreciation account. So we're going to have our accumulated depreciation at the start of the year, our P&L calculation, which is going to be 2% in this question, of the original building and the new building. We do not depreciate the land column. Okay, so we've got to be mindful of that. And then our closing depreciation is going to be just the opening. So E plus F is going to be giving us that number there every year. When you're doing your table, put in a row for the opening, calculating of the opening balance, and then put in 5 more rows for each of the years that we're going to perform. You're going to do that on the top left page of your double page. It's going to be your revaluation table. Then underneath that, you're going to have your land and buildings table. On the left-hand page, you need about 20 lines for it. Draw your T account, label it land and buildings, put in your signposts for an asset, debit to increase, credit to decrease. Remind yourself that the asset account is always at cost. So cost, cost, cost. No depreciation going in here. Okay, on the top left-hand side of your page, on the top of the next page, on the right-hand page, you're going to have your provision for depreciation T account. Again, you need 20 lines for this. Provision for depreciation, it's a liability account. Therefore, we're going to be, let me fix this. We're going to credit to increase and we're going to debit to decrease. So it's a liability account. We credit to increase, we debit to decrease. Underneath that, you're going to put your revaluation reserve. Okay, so on the right-hand page, you're going to have your provision for depreciation and your revaluation reserve. You use those the most. Okay, on the following page, so you flip over to the next page, you can put into that, you're going to have 2 disposal accounts, For the first, there's always two items sold: the disposal of the land, the disposal of the original building, and you'll also have a revenue reserve, which we'll be using towards the end of the question. So put those on the third page because you're not using them as much, and it's more efficient for you in that way. So draw and prepare your table, draw your T accounts and prepare them. You need about 10 lines for your revaluation reserve account. You need 20 for your asset and your provision for depreciation account. And your disposal accounts are small. You won't need five lines for those. And revenue reserve small as well. They're on the other page. Then you're ready to start. Read the question carefully before you start. We had a quick look at it there. We'll have another quick look here. Sorry. So in the first year, we did a revaluation. In the second year, we sold an asset. In the third year, we bought a building. In the fourth year, we did a revaluation. And in the final year, we did a sale and a revaluation. So there's only one thing happening in each of the first 4 years, and then there's two things happening in the fifth year. Okay, so to challenge the well-able student. Every single year, we're going to be calculating and entering depreciation because depreciation must be calculated every year. So we're going to follow our steps there now for doing a year for performing each of the years. I'm just going to go through the steps here. I want you again, learn your steps, know your steps. We perform each year and then we do our entries. So we fill our table, then we do our double entry, then we balance our account, then we go on to the next year. And we do the steps in the following order. You enter your opening balances over here now. Enter your opening balances for the land and the provision for depreciation. Perform the revaluation if there is one. Perform additions if there is one. Perform disposals if there is one. Perform depreciation. There is always depreciation. Then you balance your account. I want you to have that checklist in your head and keep rattling through it, and that will ensure that you don't forget depreciation, because we oftentimes do as the questions go on. We repeat those steps for each year of the 5 years. So we step through them. So let's go without further ado, and we make a start on our question. Okay, so we're going to fill in our table for the first year. So when we read it here, they're telling us that we have land and buildings, 740,000 in total, made up of 280 and 460. So we're putting 280,000 into the land, we're putting 460,000 into the buildings. So our total for land and buildings in our opening balance is going to be 740,000. Now we need to calculate the opening depreciation. So back to the question here. So the property was purchased in 2016. Okay, so we had it for 16, 17, 18, and 19. Okay, so we had it for 4 years. So it's going to be 704, or it's going to be just the value of the building, because we do not depreciate the land. So 460,000 by 2% by 4 years. So our opening depreciation is going to be 36,800. Okay, so you're putting in that extra row here for your opening balance that allows us to enter our opening balances and gets us ready to start. Okay, so we have the value for our opening balances. Now let's see what's happened in the first year. On the 1st of January 2020, we revalued the property up to 980,000, and 330 of that went to the land. So our land went up to 330,000. Okay, so it was 280, it's gone up to 330. Our total of land and buildings combined is going to be 980,000. And so we can then figure out how much was the increase in the value of the building. So it'll be the difference between the 980 and the 330. So our buildings went up from 460 to 650. Okay, so we have it very clear in our table now. The land went up to 330, the original building to 650, the total has gone up to 980. When you do a revaluation, As we know from ordinary level, you wipe the depreciation. So the depreciation, the opening depreciation, we will be removing in a minute when we do our T accounts. It'll go to zero. And our depreciation for the year will be just the original building, not the land, by 2%. And our depreciation at the end of the first year is just going to be this 1 year's depreciation of 13,000. Okay, so we've completed our table for year one. Now we're going to enter our information. So when you're entering your asset amount, we know that our asset amount started off on the 1st of the 1st, 2020, balance BD on the debit side for an asset account always, and it's going to be the total amount here, cost, 740,000. Our balance BD for our provision for depreciation account, so 1st of the 1st, 2020, always on the credit side, of course, because it's a liability account, balance BD, and that's going to be the number we calculated up top here. It's 36,800. It's 4 years at 20%. Okay, so following our steps now, guys, okay? So we entered our opening balances for land and buildings. We're going to perform the revaluation now. Okay, so the value of the properties went up from 740 up to 980. Okay, so it's going from 740 up to 980. So that is an increase of 240,000. And I'm putting that on the 1st of the 1st, 2020 into my revaluation reserve. So you're increasing the value of your asset. So you debit the asset to increase it, and you're going to credit your revaluation reserve with the increased amount. So you increase the value of the asset is the first step. Please call it land and buildings. Don't be going shortcutting L&B, please. The examiner does not like it. So step one, you increase the value of the asset. Step two, we're going to wipe the depreciation. So in our table, the depreciation went from 36,800 down to zero. That's what we're going to do now in our T accounts. We have 36,800 in there, and we're going to get rid of that by putting it on the debit side to reduce it, because it's a liability account, 1st to the 1st, 2020. And let me just widen my column, sorry. And we're calling it Reval Reserve. We always put in the name of the other account. So the name of the other account, and it's 36,800. So we're debiting provision for depreciation and we're crediting revaluation reserve. 1st of the 1st, 2020. Okay, so just going and looking at our steps now. So we've entered our opening balances, we performed our revaluation. Perform additions, there was no additions in the first year. Perform disposals, there was no disposals in the first year. Enter P&L debt for the year. So now we're going to enter our P&L debt always with the last day of the year, 31st of the 12th, 2020, P&L debt. And we get the value from our table. So you have 13,000 is in the P&L debt column for our table. 13,000 for the year, and we're good. Final step, balance the accounts. Okay, so we're going to balance each of the accounts. This question is particular, it's quite admin heavy. You do a lot of balancing the accounts when you do a reval question. In my opinion, that's a good thing once you're really good at balancing accounts. Okay, follow the steps for balancing the accounts that we did 20 that we've done in the other videos to make sure that you're as fast as possible and as accurate as possible. Please use a ruler. 1st of the 1st, 2021. So I've got my opening balance for the new year in my asset account now, 980,000, matching my table. Very nice. Then I'm going to do the same here for this guy. So I'm just putting in, use your ruler, draw your lines. Please do that now. It's really important. We've got to be neat. We want the examiner to like our work. We want the examiner to be on our side. Okay, so decide which side is the biggest. Balance CD above the total on the smaller side. Again, I'm not going into this, guys. I've gone into this in the other videos. You'll be well able for this at this stage. So starting off year 2 with a lovely opening balance of 13,000 and a nice asset balance of 980,000. We are ready for year 2. We don't balance the revaluation reserve account. We don't have to do that in this question. Year 2, what's happening? 2021, we've a disposal. Sold the land which cost 280,000 and was revalued on the 1st of the 1st. Okay, so we're doing the disposal step for that now. And again, we went through disposal at length in the ordinary level video, so please make sure you're familiar with that. So we sold the land. The land is going to go from 330 down to 0 in a minute. I'm doing my table. No change with the original building. So my total land and buildings is going to be, my total land and buildings now is going to be 650,000. My opening depreciation at the start of year 2 is 30,000. My depreciation for the year will be 650 times 2%, 13,000. So my closing depreciation is going to be 26,000 at the end of the year. We are ready to start entering. So again, following our nice little steps here now, guys. So into the opening balances, we've done that. Perform any revals, there wasn't any. We'll do the addition now, and then we'll enter the depreciation because there's no disposal. Okay. Sorry, we'll do the disposal because there was no addition. Okay, so we're getting rid of the land. So steps on disposal. We sold it on the 1st of the 1st. Okay, disposal. It's always the cost amount. You take the amount from your table. It was 330,000. So the most up-to-date number on your table is what we take out. Do your double entry always. Credit the asset account, 330,000, and we're going to debit the disposal account with 330,000. Okay, on the 1st of the 1st, 2021. Land and buildings. Okay, so take the asset out of the asset account. Now we're going to take the depreciation out of the depreciation account. So all of the depreciation relating to the original building, which for us is, there's no depreciation because it's the land. There's no depreciation on the land. So we've no entry to make for depreciation because we sold the land. Okay, so then we've got, so no entry needs to go in here in relation to disposal because land is not depreciated. Then we have to find out what did we get for it. Sold for 430,000. Okay, so that would have gone as a debit into our bank and it's going to be a credit in here, 430,000. Okay, and that's it. Then we just have to calculate the profit or loss on disposal. So again, there's no balance on a disposal account. The missing number is your profit or loss on disposal. So in this situation, they made a profit on disposal. They thought the land was worth 330, and when they sold it, they got 430. So they made a lovely profit on disposal of 100,000. Okay, that's our disposal steps done. So the final step then, going back to our list of steps, we need to enter the depreciation for the year. Don't forget it, guys. It's very common to forget it. So 31st of the 12th, 21, P&L debt. Credit side of your provision for depreciation account. We don't have to do the P&L debt account. They told us that in the question. Take the number from your table. So go to your depreciation column for the year, 13,000 in there, column F, P&L debt. That's it. We are ready to balance. Okay, so I want you to push yourself for speed on the balancing bits. Okay, so make sure that you're doing it as fast as you can so that you can save your time for other things, your thinking time for other things. This is admin, we need to be fast. Balance CD above the total. 22. So we're starting off again now with 650 on there, which is looking good. And we're going to balance this guy. So ruler, guys, single line for the for the adding line, and double line then under your totals. Did I forget to enter my depreciation? I entered here. I did it. My depreciation, my P&L debt, 13,000. In we go here. I'd say I talked about it and I never entered it. Balance CD above the total. $26. Lovely. Okay, so we're ready now to start 2022. Okay, so let's go look what happened in 2022. We purchased a new building. Okay, we have to put all components of the purchase into the assets account individually. We purchased it for 320. We paid a contractor, that's still part of the price of the cost of the asset. Okay, so the contractor money, that's going to be its own line. And we paid our employees to do the building work. So the three of those are going to go in, and then we have legal fees of 10,000. So the four of those are all going to go in. They are all costs of purchasing. If there was repairs and maintenance, that wouldn't be going in there. That's an expense. These are all costs of purchasing the business and therefore must be included. Okay, so we've got 320, 150, 90, and 10 in the new building. Okay, so 350,000 plus 150,000 plus 90,000 plus 10,000. So the four of those are going in. We still have no sold the land. There's been no change to the new building or to the original building. So now our total value for buildings this year, our total value for land and buildings is 1250. Our opening depreciation for the year is our closing depreciation of 26 grand. And now when we calculate our depreciation, we have to include the original building and the new building, because the depreciation policy says we do a full year on the year of acquisition and none on the year of disposal. So that is where we get our number. I got this right now. Let me just double check now that I haven't made a typo on this, guys. 21, 50, 10, and 90. Yeah, I think we're good. And I just want to make sure that our depreciation 350. Oh yeah, sorry, I have a typo here. 320, 150, 90, and 10. There we go. So 570,000 is the value of our new building. Yeah. And then our total buildings are going to be 1220. And then our depreciation is going to be 24,400. Yep, and we're good to go. Okay, so let's again follow our little system that we have here. Okay, so enter the opening balances. We did that. Perform revaluations, there was none. Perform additions. So let's do our little additions here. So in the first of the first question, we purchased the new building. So first of the first 22. So we're going to have bank for 320,000. We're going to have the first of the first 22, and we're going to have bank for the contractors, 150,000. You must enter them individually because that is how it would work in reality. You're paying these different people. The own employees, so we could say bank stroke wages for the employees bit of 90,000. And we're going to have bank for the legal fees of 10 grand. Okay, so that's all of our assets gone in there for the year. So perform additions is done. Perform disposals, there weren't any. Enter our depreciation for the year, 31/12/22. P&L dep. Take the number from the table, 24,400 from column F in the table. Every time your P&L number is coming from there. And we are ready to balance for the year. Okay, so again, guys, it's admin heavy. Okay, so we have a lot. You have a lot. Your speed in balancing accounts is really going to help you here. Okay, so just get good at it, get fast at it. Keep your calculator flat on the table on the right hand side of you, or if you're right handed, and get a good calculator, work fast. A big calculator, they're not expensive, they're only about €20 for a good sharp one. It will get you so much time over the course of an exam, guys. It's a game changer. If you have to pick up your calculator and you have a scientific calculator, you are costing yourself major time. We're on to 2023. Okay, sweet. Brilliant. Back to the question. 2023. Revalued the building. So we've got a revaluation of both buildings, a 15% increase. Okay, so no change to the land. We still have the land. The buildings have gone up by 15%. So I will multiply that by 1.15, 115 to get the value up. Okay, so I'm adding 15% to both buildings individually. And when I add them together, that adds to the 1403 that they gave us there in the question. Okay, so the 1403, I'm tying out to their number. So I'm happy. Both my buildings have gone up by 15%. I have a revaluation situation. When we revalue our buildings, we wipe our depreciation. So my depreciation is going to zero, and both of my buildings are being revalued. Okay, so it's gone from 50,000 down to zero, my depreciation, and my P&L dep for the year is going to be the new higher amount by 2%. That's my P&L dep for the year. Okay, so this 50,400 is made up of depreciation on both buildings. So we just need to be mindful of that later on when we're doing the next step, when we're doing next year. Okay. And this 28040 or 28060 is depreciation on both buildings as well. Okay. So now we're in a good position to go and do our entry for the year. So enter opening balances is done. Well, it's not because I forgot to do my balance PD here. Oops. Yeah. So perform any additions. There was no additions, but perform revaluations is the first piece. Okay, so we're doing our reval. So first of the first 23, I'm going to have revaluation reserve. It's going to be the amount that the buildings went up by. So they went to 1403 from 1220. So that is an increase of 183,000. 183,000. Yeah. So can you see where I'm getting that there now? There was at 1403, total value of buildings went from 1220 up to 1403. You can see it in your table for the total there. And that is an increase of 183,000. Okay, so I've increased the value of my asset. So I have debited my asset account, 183,000. I now need to credit my revaluation reserve. So perform my double entry. So revaluation reserve for land and buildings on the 1st of the 1st, 23. And then I'm also going to put in wipe my depreciation, provision for depreciation. So we're going to do that entry there now. So I'm getting rid of all my depreciation. I'm going from 50,400 to zero. My balance here is 50,400. I am getting rid of it. This asset did not lose value. We got it valued by an auctioneer and it didn't lose value. So that depreciation number is not accurate. So we must wipe it, clear it, get rid of it. So we're debiting the provision for depreciation account, reducing that liability account, and we're going to credit our revaluation reserve. You always put in the name of the opposite account. Okay, so I'm saying provision for depreciation here in the revaluation reserve account. Okay, doke. So that's my 2 steps of reval done. I've increased my asset and put it to the reserve. I've wiped my depreciation and put that to the reserve. That's that bit done. Okay. Now I need to enter my depreciation for the year. So 31/12/23, P&L dep, take it straight from our table. 28,060 straight from the table. And we're good to go then, guys, to balance again. So lots of balancing. Okay. So even if you fully get this, you're going to have to work on your speed, guys, because it just requires practice to get up to the speed of it, because there's a lot on the admin side of it. Yeah, I just need to tidy this up a small bit. Yeah, that's that balanced. And now we're going to balance this guy. And onto our final year. So in our final year, guys, we do 2 things together. Okay, so we have more than one thing happening in the final year. So in the final year, we have a sale of the original building and a revaluation of the new building. So we're going to work through those steps. So just following our process, we're going to do the reval first. Okay, because we'll just be consistent. We'll do the reval first. So I'll fill out our table anyway. Land goes to zero. The original building is going to be sold in a minute, and we're going to deal with that. And the final remaining building was revalued up to 840,000. Okay, so it went from 655,500 up to 840,000. Okay. This is going to zero, right? But there's 2 reasons that my provision for depreciation is going to zero. The depreciation that relates to the original building is going to go to the disposal account, and the depreciation relating to the new building is going to go to the reval account. So we're going to have to split that up and deal with it accordingly. Okay, so we'll do that. We will. Our depreciation on the new building is going to be 2%, and then we just finish our table out nice and neat like that. Okay, so we're going to perform our revaluation first step. So the final and remaining asset is going from 655.5 up to 840. So I'm going to put that increase in my remaining asset. So 184,500 is going to go into increase my asset revaluation reserve. So I never put in my balance PT there. All right, reval reserve on the 1st of the 1st, 24. So I debit my asset to increase it, 184,500, and I'm going to credit my revaluation reserve account for 184,500. Okay, so that's land and buildings, and 1st of the 1st, 24. Then I'm also going to get all of the depreciation, so increase the value of my asset. Then I'm getting all of the depreciation relating to the revalued asset, and I'm taking it out of here and putting it in there. So we have to do a little bit of a calculation for that now, guys. So this 28060 is made up of depreciation on building 1 and building 2. So I'm just going to do a teeny weeny little exercise down here to break that up. So on year 4, okay? I'm going to just do a little exercise to break that down just so that you can understand it well. So we had two things. We had 1 year, we had revaluation, or sorry, excuse me. We had 1 year of depreciation on the original building at 2%. So the original building, 1 year at 2%. Okay. And then we had the new building at 2%. At 2%. So what I'm trying to show us here now, guys, is the 28060 that we have in our balance in the provision for depreciation account. That 28060 that we have here and the 28060 that we have here is made up of the original building and the new building. Okay, so it's 1 year for the original building, which is sold, and 1 year for the new building, which is revalued. Okay, so when we're doing our revaluation reserve for the new building that's kept, we've got to wipe the depreciation. So we increased the value of the asset over here by 184,500, and now we've got to wipe the depreciation here in our provision for depreciation account. Okay, so it's going to be 1 year of depreciation on the new building, 13,110. That's the amount that we're going to be putting into our revaluation reserve. So we're reducing our provision for depreciation 2024 by 1 year of depreciation on just the new building, and we're putting that to the revaluation reserve. Okay, P&L provision for depreciation, apologies. Okay, so that's our disposal, or that's our revaluation completed. We increased the value of the asset 184,000 it went up by, and put that to the reval reserve. We took out all of the depreciation relating to just that asset and put it to the revaluation reserve. That's our revaluation done. So into the opening balances, perform the revaluation. Perform additions, there wasn't any. Now we have to perform the disposal. We got rid of the original building, so the 747,500 is gone. We got to get rid of that now in our accounts. So on the 1st of the 1st, 24, we've got a disposal of the value of the building. Take it from the cost column in your table, 747,500. So we're crediting All right. Crediting the asset account, reducing it because it's sold, 747,500. And to complete the double entry in your disposal T account, you're putting that value, the cost of the asset, from the cost column in the Reval table. Lovely. Okay, so that's coming out of there. Then we need to take all of the depreciation relating to the original building out of the provision for depreciation account. So remember, we've already dealt with this guy now. He's done. That's the new building. So what's left then of the original in that account belonging to the original building, 1 year depreciation at 2%, we're taking that out of here now. Okay, so I've got 1 year at 2% coming out of there now and going to the disposal account. So the 1st of the 1st, 24, debiting our provision for depreciation account. I hope the scrolling isn't confusing, So I'm debiting the provision for depreciation account, 14,950, and I'm going to credit my disposal account, 14,950, with all of the depreciation relating to the asset that was sold. Okay. Now we must go back to the question and find out what did we get for it when we sold it. So sold for 820,000. Okay, 820,000 into the bank, debit bank, credit disposal account. Okay, so we did well on this one as well. So we will have made our no balance on a disposal account ever. Okay, so we just have a profit on disposal of 87,450. You're doing great now, guys. Keep going. Stick with me. So this is our profit on disposal. Now we're ready to balance the accounts again. Okay, so we're just normal balancing. Oh, we're not. This is why we must have our steps. Okay, follow our steps. So we did the reval, no addition. We did the disposal into your P&L depreciation for the year. So stick with those steps, because otherwise, no matter how good you are at this, you will go wrong. Always be checking, have I done all my steps before you go on to the next year? And that'll catch you for leaving out the depreciation at the end. Pull it from column F in your table, 16,800 P&L debt for the year. Okay, so we started that final year with 28 grand in a provision for depreciation account. A portion of it went to the reval reserve because we revaled the new building. The other portion of it went to the disposal account because we sold the original building. So everything we had at the start of the year, the full 28,060, is gone. And now we have new depreciation, and the revalued asset is what's left inside there. So we're balancing our account now. The final balance. It's a bit of a squeeze for me over here now. So because I'm taking an extra line every time I'm balancing my account at the moment, I'm running out of space there, but we're okay. We'll squeeze it in. I think you have it, to be honest. Balance CD. Oh, last day there. I'm just going to stick in a couple of lines here. Bear with me. Lovely. So the balance BD at the end of the year, 840,000. So that is our asset account, fully done and dusted. Well done us. Okay. And we're going to do the same now for our provision for depreciation. So we're balancing the account. Liability accounts, usually the bigger side is going to be on the credit side, guys. So speed this up a little bit. Normal steps for balancing the account here. I'm not going through them. You're There's another video on that. 24. Beautiful. That is the end of our provision for depreciation account. Full marks for us there. Well done. Just give that a little colour there so we can see it. Full provision for depreciation account for all of the years. We have our disposal accounts done, so you'll have full marks got on those. We still have one more step to do now, so that's the first disposal. You create a disposal account for each individual disposal. There's no balance on a disposal account. And we're on to the final steps of Reval. So we've completed the most of things now, right? We've done all the years. The final part that we need to do is we need to deal with assets that are revalued and sold. There is extra steps required for them. Okay, so if an asset has been revalued and sold, we need to do a reclass between the revaluation reserve and another reserve called the revenue reserve, because it means if your numbers in this account, it means I think that my assets have gone up in value. So this is the I think my assets have gone up in value account. If you sell it and you got the money for it, which we did in both accounts, we made a profit on the sale, then you know you made a profit on it. So you can move it over into the revenue reserve account. So I kind of use that logic in my head. This is the I think I made a profit. This is not accounting language now, guys, and we wouldn't be writing this. I think I made a profit. This is just kind of getting our own heads around it. That's what the revaluation reserve account is. And this one is I know I made a profit because I've sold it. Okay, so we've got to calculate, there's two assets that we've sold. We know we've made a profit on them. We've got to move the values relating to those two assets from here into here. That is all we've got left to do. Okay, so we'll follow the steps for doing that. The first one let's look at what we sold first of all. The land was the first thing. So we had it for 280, it went up to 330, and then we sold it. So the land is a straightforward one. So the original building, we had it, we revalued it. It stayed at the revalued amount for 3 years. Okay, so interesting piece of information there that we will be using. Stayed at the revalued amount for 3 years. Then we revalued it again, and then we sold it. Okay, so we gotta figure out all the little parts for both of those sales, and then move the values from here, from the revaluation account over to the revenue reserve account. So let's just step through that there now. Okay, so the first one we sold is easy, the sale of the land. So I'm going to put a little heading here, and you do this in your notes as well. So this is the reclass to revenue reserve. I have all of this seems to be wanting to wrap for some reason. Let me fix that. Okay, reclass to revenue reserve. Okay, so we'll pop that in there as a little heading, and we'll do our little steps for that here. So number one is going to be the revalued the land. Okay, it is easy. Okay, it went from 280 to 330. Okay, so if you go to your table, you see it went from 280 to 330. So we had an increase of 50,000. So all we're doing is we're taking that 50,000 out of here. Stop that now. And we have to do it on the year that we sold it. Okay, so that was 2021 is going to be our date for that. I know I'm doing it at the end now because it's more efficient, but the date we're going to put on it is the first 2021. So we're crediting that there, and we're moving it over here, or we're debiting that there, 21, and we're moving it over here. Okay, columns a bit wider. Sorry, now I just need to fix my arrows are not correct here. They're liability accounts, both of them. So we credit them to increase them. Okay, so we're making this guy bigger by 50,000 for the sale of the land. I know I made that profit because I know that I know I made profit is the wrong word. I think let's change that. I think it has increased, and this one is, I know it has increased because I have the money. I've sold it. Okay, that's the reval of the land, dead straightforward. There's a bit more work in the revaluation of the in the original building. So we're just going to go through the steps for that. Okay, so the revalue of the land is straightforward. You take the number from your table, debit the revalue account, credit the revenue account. The sale of the original building, there's just a bit more in the steps for that. And we just need to practice them a little bit to kind of get the hang of them. So we're going to do it in 4 steps. Okay, we're going to have the first reval. And we're going to put in the cost. And we're going to put in the wipe of the depreciation. Then we're going to have the second reval, the cost, and the wipe depreciation. Okay, so we have to get 4 pieces of information to get the value, the final value that we need for that for the reval of that building. Okay, so the first reval, the cost of the building, it went, just use your table, it's so straightforward. The building went from 460 to 650. So the difference between this and this in your table. So 650 minus 460. Okay, that's all we need to put in there. So it's going to be 650 minus 450. That's all we're doing to get that 190,000. And we had to wipe all of the depreciation. So we only had one building being depreciated. And do you remember the depreciation went from 36 to 0? So we wiped all that depreciation. So we're putting in that. So the increase in the value of the asset and the depreciation. That's the first 2 parts. The second reval. It's the second time we revalued that building. Again, we're going to go to our table and see what happened. It went to 747 from 650. And it's that increase is what we need to get. Okay? So it's going to be the 747 pull it from your table. Just read the table, guys, and you will find those numbers there. So straightforward. It just takes a little bit of looking at it. So go back to your table. It went from 650 up to 747. So it's that increase. The final one is the kind of trickier one where you have to get how much depreciation did we use when we did that second reval, how much depreciation was in there. So when we did the second reval, we revalued 2 buildings at the same time. We went from 650, apologies now. Yeah, we went from 1220 up to 1403 and we wiped the depreciation. So it went from 50,400 down to 0. So we've got to figure out how much depreciation was in there belonging to the original building. So I want you, all you have to do to get this number ever is look at for how many years was it at that revalued value in the middle. How much was it? How many years was it at that amount in the middle? That is the amount of depreciation we're looking for. So we can clearly see there it was 3 years at 650,000. That is where I'm getting that number from. So it's going to be 650,000 multiplied by the 2% multiplied by 3 years. And that's where we're getting the number from. Okay, So I'll just write that in here. 650,000 by 2% depreciation by 3 years. And I can see the 3 years by reading my table. See, I've marked it there in brown for you. It was at 650 for 3 years before we did that final reval, and that's where we're getting that number from. Okay, so we're going to now add, back over here. We have the 4 bits now that we need to be able to get the value of that second reval. So it's 663,300. So we're going to be taking that amount. It's all of the revaluation information relating to the second, or to the original building, which was revalued and sold. We're taking it out of here on the year that it was sold, and we're putting it in here. Okay, so go over that a few times, guys. That one people do find a bit tricky. We then do need to balance these accounts because they've asked us to do a revenue reserve. Or sorry, they've asked us to do a balance sheet extract. So we're going to need to do quickly balance these accounts and do a very quick balance sheet extract. It is important that we do it because there's like 5 marks going for that in the marking scheme, I think, and they're really, really easy ones for us to get. So let's make sure that we get this done. So you really have to work fast on a lot of the easier elements of this question. And that comes with practice. Just pick a question and keep practicing it. Keep practicing it until you get like crazy super fast at it. That'll bring you your speed. You can then go on and do other questions, but stick with just doing one question until you get crazy super fast at it. That we got our balance there for the balance sheet extract. And same with this guy. Awesome. All right, so we're done and dusted there now. Right, so we are now ready to do the final little bit, the balance sheet extract. Okay, so I'm just going to do it down the end here. It's extremely easy, guys, so please make sure you get the time to do it and get it done. It's a little snippet from a balance sheet. So balance sheet extract. And all we need is we're going to have our fixed assets section. Oh, oops. Fixed assets section. We're going to have cost, accumulated depreciation, net book value, land and buildings. All we're doing here, guys, is taking the balance CDs or the balance BDs from our work and entering it in here. Okay, so the balance BD from our asset account, 840,000. Our accumulated depreciation credit balance, 16,800. So our net book value is going to be one minus the other, 823,200. Okay, that's the top part of our balance sheet. Now our financed by section, which will always have our capital and reserves. So we're going to have a reval reserve and REVENUE, a revenue reserve. The 2 of those. So the reval reserve, just make sure you don't mix your numbers up, 294,510, and the revenue reserve for what we has been revalued and sold is our 413,300. So that is your balance sheet extract. Okay, that's all you need to do to get it. And in our marking scheme, let's just have a quick look at the marking scheme there. There's big marks going for that. Easy marks. 1, 2, 3, 4. 4 easy marks going for the balance sheet extract. 2 marks going for the revenue reserve. However, there's another 3 going for the crediting to the revenue reserve. So there is a good bit going for the revenue reserve. We do need to do a job on it. You have to balance your account there to get your marks. Disposal account 1, 3 marks. Disposal account 2, 4 marks. So 7 marks for disposal overall. So there's a good, I suppose, spread of the marks across the question. So guys, in summary, right? This is a brilliant question, very doable, very repetitive. The only challenging bit really is the bit at the end, the reclass from the revenue to the reval reserve to the revenue reserve. But speed is king for this. You have to practice it. So please lay out your table, lay out your pages correctly. Follow these steps so you don't miss anything. Balance your accounts really quickly. Lay out your table really well and follow your table. Let your table inform all of the values that you're going to be using, and you will not go wrong. If you keep pulling your numbers from the question, it is likely you will take an unrevalid number or something like that. So make your table, use your table, and best of luck with it. It's a very doable one, and I hope you found this useful. Thank you.